Hello class, this is Peter Deswood, the third. I'm the instructor for Accounting 100. This is going to be Chapter 1 presentation. I will provide you with a link to the Google slides so you can take a look at it. But again, my name is Peter Deswood. I am the instructor for this class, so I'll go ahead and get started with the content. I'll try to put videos like this together for you, and I'll also put links to other videos that will be important. I know everyone has YouTube and uses YouTube, so I'll connect those links into the section as well. So, introduction to accounting. So a lot of these slides are directed to learning goals, learning objectives. So this one is purpose of accounting. So I kind of started in with questions. So users of accounting information, as you can see over under the very right, it says decisions made by users. I like to start from the right instead of going from left to right, because the decisions, all accounting is used for is to make decisions. Managers, middle managers, chief executive officers, chief financial officers, chief operating officers, all of these managers, crop managers, industrial managers, they all use information. So it says it is also done for present and future. To look at profitability, it looks at performance measures, seeing how the company's doing. There's also seeing if it's profitable, looking at debt to equity, looking at ratio, seeing how much assets are if we have enough assets to buy and create a loan, things of that nature. As you can tell, it does say that on there, should a loan be granted for a business. They look at your debt to equity ratio. They look at your cash flow statements, things of that nature. So the purpose of accounting is to analyze these, analyze transactions that are made and put them into a common language. So that's extremely important. So the accounting process, as you can tell, this is very similar to the book. It's analyzing transactions. You analyze those transactions, and we're going to take a look at that. We're going to go through little steps of the accounting process. We're going to record. We're going to do double entry using debits and credits to record. And then after that, we're going to classify. We're going to classify them in counts. We're going to also put them into which financial statement, which of the four financial statements would each of the double entry accounting go. Summarizing those findings, in all of the work actually is done to the four financial statements. So that's where we're summarizing them. And then the summarizing is a part of the reporting. So we'll report those financial statements. In fact, I'm on the Navajo agricultural product industry. And this Friday, we actually have a board work session to finalize the 2019 business year or fiscal year. So we're actually going to look at the reporting of the financial statements and get them ready for audit. So that's one of the things you look at in the reporting stage. And then the last arrow points to the interpreting. So you're using these accounting, the language of accounting to interpret business, looking at different structures. And it's a formal process to looking at business and the flow of money. I think that's one thing that is nice about accounting. If you like structure and systems, accounting is a good field for you. So you look at that accounting process, and it's all one step to the other. You repeat it the next month. You close your books out, depending monthly, quarterly, biannually. Of course, it depends on your auditor and your standards. So that's the cycle. That's the process. So moving on. So why do we do this? There are laws that govern. They're called the Generally Accepted Accounting Principles, GAAP. Everyone refers to as GAAP. If a new law comes out, they refer to a GAAP, whatever law that they're talking about. What is GAAP? It's rules of accounting created by the Financial Accounting Standards Board, the FASB. There's also the GASB, which if you're in, I think, 310, they call it GASB, Government Accounting Standards Board. And that's what we use in the United States. The purpose of the GAAP is to ensure companies produce financial information that is useful to the current or future users of the information, so that they can make educated decisions about the company and for the company. So there's a lot of users, lower level managers, middle level, upper, which is which is the executive staff, and then also the board. All of these groups use pieces of the accounting that we're going to look at. So why do we need GAAP? Actually, I skipped a couple. For financial information to be useful, two characteristics: it must be relevant to make decisions, and it must be an accurate representation, so it depicts the economic reality of a business and their activity. So that's important to know, those two factors. And why do we need it? Well, it ensures consistency in reporting the presentation of financial statements, the 4 financial statements. So it's important that there's consistency, and that's why the GAAP is used, okay? Also, there are 3 types of ownership structures. There's and some advantages and disadvantages. We'll take a look at each of those. So there's the sole proprietorship, that's one owner. As you move from left to right, the amount of risk decreases. The sole proprietor assumes all of the risk. The owner makes the decisions, and if you look to the right, as the decision-making power changes from the ownership, it goes from ownership to management if you go from left to right. Partnership is 2 or more partners. I've seen partnerships with up to 15 people. Partners share the risk. However much money they put into the partnership, that's how much risk they have. Although sometimes if there's harm in product or service that was created by a company, the partners can also be personally liable for if something was to happen. Partners may disagree on how to run business, so that's part of the decision making. And over to the very right are corporations, C Corp. There's also LLCs, limited liability corporation. There's also S Corp, which I already said. There's also limited liability partnership. So those are a couple. Stockholders have limited risk because the corporation is actually like a human being. You file articles of incorporation, and the corporation is basically a standalone entity. It has its own tax ID number. Stockholders may have little influence on business decisions, so that's where the decision making is within management. So that's the 3 ownership structures. So sole proprietor, some of the advantages: easy to start, easy to wind up. You just need some money and an idea, and you can get going. Quick decision and prompt action. You're the one making the decision, so you can take actions quickly and move on that. Flexibility of operations. You can decide to start your business in Chinle. You can move it to Kirtland, Kayenta, wherever you want. So there's flexibility. Direct maintenance of business. You're the one that is responsible for the maintenance of the business, so you have that direct. Your money has to be put into it. As far as the disadvantages, there's limited capital. Limited because it's how much money you have in savings. Unlimited liability. Liability is high because your name is tied to this company. So the liability is completely on you if someone's harmed or hurt. People can sue you for your house, things of that nature. Lack of continuity. With that is business can't be the same every month. There's ups and downs, there's flows in the market, there's trends and ups and downs that you have to account for. So that's why it's lack of continuity. Limited size. Well, you're the company, so you can hire employees, but it's your idea. So that's why it says limited in size. You can't get too big because, whenever I consult with sole proprietors, I make sure if they are below 50,000, I'll tell them I'll help them. But if they get above 50,000, I tell them to file file their articles of incorporation, so that they limit their liability, they limit the risk that they have. Lack of managerial experience. Now, what that means is you may start the business, but you may not have a business background. You may not understand how accounting. You may not understand bookkeeping. You may not understand how to lead a company. You may be really good at, let's say, for example, cooking, but you might not have the business expertise, or you might be really good at making jewelry or anything like that and just lack that managerial expertise. So that's what that means, okay? And moving on to partnerships. The business is owned and operated by 2 or more people. The advantage is easy to start. It's very similar to a sole proprietorship. except you file a partnership agreement, and that's between you and the other partners. You talk about how you're going to be paid, how you're going to split profits, what's going to happen if there's no profits, what percentage you're investing, your partners are investing, what they bring to the business, things like that. There are a few regulations to this. It's kind of governed by you and your partners. Obviously, you have to follow the IRS and things of that nature, but for the most part, the regulations is basically on the partnership. It's easier to raise capital for business because there's multiple people that are in this partnership that contribute or invest money. Partners' knowledge and skill can be strengthened. So one partner might be an engineer, the other partner might be have a business management degree, so then they would separate those duties if they're building something or providing a product or service. Disadvantage, there's still unlimited liability because the partnership is between people, okay? Just like the sole proprietorship. Limited life of business, what that means is that once one partner dies or decides to retire, then the partnership has to be dissolved. When you get into Accounting 200, towards the end of the book, we look at dissolving partnerships. Profits are shared among the partners. So if you say that one partner will get 60%, the other will get 40%, that's where you talk about what happens if there's a profit. You talk about if you're going to give yourself a wage, anything like that. And if there's disagreement between partners, well, it's between the partners. You guys have to figure it out and try to come up with an understanding. So that's partnerships. Corporations, there's a conventional corporation. They call that a C Corp. There's an S Corp. There's a limited liability corporation. There's LLP. There's several different type of corporations. But again, advantages, limited liability. The liability falls on the corporation itself. Remember earlier I said a corporation is like a legal entity. It's like a person. Actually, a corporation sometimes has more rights than individuals. But limited liability, the corporation gets sued as opposed to the partners or as opposed to a sole proprietor. Size, there's more money for investment because they're shareholders. Shareholders can raise more capital than partners or sole proprietors. The size can be unlimited. There's some corporations that have 50 to 150,000 employees that are global or in the continental U.S., but that's the size can be unlimited. It's perpetual life. Because it is a legal entity, it's like a person, like I keep saying, it can live a lot longer than the person that created the company. So that's because the company is illegal, it lives on its own. And as long as people are investing in it, it will stay alive. Ease of ownership change. All you do is sell your stocks to other people. Sometimes on the New York Stock Exchange, stocks are usually in preferred stock or common stock. There's other stock options, but those are things you look at in advanced accounting. Ease of attracting talented employees. Corporations have a lot easier time hiring people, so that they have a larger access to the job market. Separation of ownership from management. What that means is you want your owners of the company to stay out of managing it. So it's kind of a separation of duties and responsibilities, so you got to keep that in mind. Some of the disadvantages, of course, are extensive paperwork. Again, it is a legal entity, so typically lawyers will draft your articles of incorporation. Actually, I think you can do it online for free for I think $80 or $90, but I would always have a lawyer check up on your articles of incorporation. There's double taxation. You'll get taxed and the corporation will get taxed as well. So you have to take a look into that. 2 tax returns. One is your individual tax return and the tax return for the corporation. Size can also be a disadvantage because when you get too large, if growth isn't planned for properly, it can grow a lot larger than what you expect. Difficulty of termination, man, it's quite a deal to divest a corporation. There's so many. Basically becomes a big old lawsuit because people want their money, and a lot of times I've only seen it happen mainly with bankruptcies where there's like people are getting out and closing the corporation down. So there's like people want their money and they've invested it and they're not getting their money back, so people are upset. So there's a lot of lawsuits. Possible conflict, like I said, lawsuits. There's stakeholders and board of directors. that oversee it, and there's conflict between board, stockholders, and also the employees. So there's a lot of navigating you have to do. And then initial costs. A lot of times these corporations are sole proprietorships, then they become partnerships, then they go to articles of incorporation. So there's definitely a stage you can go through to incorporate and become a corporation. So types of businesses, these are the types of activities. There's a service industry. If you're an accountant, you'll probably fall under the service industry where you're providing a product or service. Oh no, a service, not a product. Over on the right is a product. The merchandising, that's where you're selling stuff. Okay, you're buying stuff at wholesale and you're selling it at retail. Target, things like that, Walmart, Sam's Club. Service industries like T&R, H&R Block, any law firms you hire, that's service industry. If you hire an engineer, if you hire someone to come and trim your yard or dig a hole for you, that's service. They're providing a service to you. And then merchandise, obviously you're selling merchandise, and then manufacturing is where you're building something. If you're creating something, then you're a manufacturer, and you're doing it mass. You're creating like a lot of products, so that's manufacturing. But I guess you can be all three, because sometimes if you're creating it, if you're like, say you make jewelry, you're manufacturing, and then you're going to merchandise it. So you're the two on the right. And sometimes if you, like, for example, I do taxes and books for a lady that runs her own salon business. So she provides services, but she also sells products. So there's a mix and match over there as well. Okay, so those are the three business structures: service, merchandising, and manufacturing. So now we're going to take a look at career opportunities in accounting. And which path do you choose? It's up to you. I'll be honest, I got an undergraduate degree in accounting from Fort Lewis, but I'm actually I actually switched out of the field, but I still do accounting. I still do taxes, I still do books first, and I do small business consulting, because I understand the accounting process and how to read numbers. So you can go public or private. There's pros and cons up there as well. But you can take a look at those. I won't read everything to you, but I tell you what, accounting is one of those fields where if you can get through accounting, it's definitely there'll be a need for a job with your education. So accountants, I was an accountant for 1.5 years at a car dealership in Wisconsin. So I was actually a what do you call it, an entry-level accountant, and then moved up. So I was actually in the public accounting. So actually I was in private accounting, because I was actually a fixed asset accountant, looking at car assets and some of the buildings and stuff like that. But under a public accounting, there's auditing, taxation, and there's management. And then the private is accounting information systems. That's where you create systems for companies. Financial accounting, there's cost accounting usually falls under managerial, where you're costing manufacturing. There's budgeting as well. There's actually tax accounting, which is what I do as well. And then there's internal auditing. So that's someone that audits within the company. And notice over on the left side over here, it says auditing. That's external auditing as well. And on the very right is the government and non-for-profit. So that's accounting as well. And there's different forms of that you'll look at. So if you take 310, we'll take a look at government and non-for-profit. So those different sections over here, we can talk about those. Okay. So again, just to review the learning objectives, describe the purpose. So we looked at that. We described the accounting process. We looked at that. Define GAAP. Why GAAP? So we went through. We talked about that as well. Define 3 types of businesses. We looked at that: the sole proprietorship, partnership, and corporation. We looked at classifying different type of businesses by activities. So service, merchandising, and manufacturing. But if you think about it, break it down. You either buy stuff. No. You either create some. It's either a product or a service. You do something, or you make something, and or you can sell. So just kind of a quick one. And then identify career opportunities. We looked at different accounting opportunities in the accounting field. So some of the homework, I'll also put this on in Blackboard, but the homework is basically at the back of the book. But I'll put it on here if you don't have the book yet. Just write this on a piece of paper, and you can screenshot it and send them to me via email. What is the purpose of accounting? We talked about that. So notice how they're tied to learning objectives all the way down. Describe 6 areas of specialization for managerial accounting. So this is all in the textbook. And then the purpose of accounting, connect those, those positions on the left with the explanation or the describer on the right. And then put the accounting process in order from starting to finishing. That's the accounting process. And then purpose of accounting, describe the kind of information needed by the user. For example, the owner, what information do they need? Managers, creditors, and government agencies. So a lot of this stuff is in the book. I just thought I'd put together a video so you can see what's going on. And these questions are in the back of the text, or if you have the online book, you can. So that's kind of what we're looking at, accounting process, a little bit more detailed explanation of them. So these are the questions, the homework questions. Again, if you need to, please submit the questions via email. You can write it down in your journal, your notebook, and then submit it to me. That'd be great. Or if you want to type it in an email, that would also work as well. Or if you want to type it in a Excel spreadsheet, that's good. Or even you can put in a Word document. I'll also accept it that way. So I'm pretty flexible. If there's a question that you have, please feel free to email me. Just email me before 9 p.m. at night. We usually go to bed early, but we're up early. We usually get up early and run and take care of our health. So feel free to email me, and I appreciate you all being in my class and being patient. I'm still trying to finalize the syllabus because I don't have a textbook yet. I was luckily able to pull this information off the internet. So please be patient with me. I appreciate it, and I look forward to working with you. Thank you, and have a good day.